There are a number of challenges, amongst them not least the ability to find sufficient resource from either internal or external sources with sufficient skill sets to address the problems inherent within the challenge. Another issue is the availability of appropriate data. Many institutions have either insufficient detail in the information that they have available historically on the performance of their accounts, or they find that the data is inappropriate for the purposes of trying to future project loss forecast. It may also, of course, be the case that even where sufficient data does exist, that because we've moved through a recessionary period, that the way in which accounts have performed over recent years is not truly indicative of the behaviour that we might expect going forwards.
One of the key first decisions to make is how you're going to incorporate your economic forecasts into your lifetime loss models. And the sorts of skilled resources that you need to be able to do that are typically already fully dedicated to business as usual activities. So understanding where you're going to get that resource from is a key first step. Another consideration is the amount of historical data that you have and how relevant that is to what you're lending now. So one example of that might be it refers to an economic recessionary period, whereas now we're into a recovery. Alternatively, it might be that it refers to when you were lending on different terms or had different policies in place.